Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on the gold market. So as gold market is euro currency, does let us to relax. So actually the situation is really tricky as here as on euro currency. So on the euro we have discussed this just a few minutes ago. On gold markets, take a look what's really is going on. So in weekend we talked about this pattern that has been formed on Friday, and this recent collapse that we've got on Friday has created a bearish reversal session and bearish engulfing pattern. And we said that, well, although daily trend remains bullish and theoretically it is possible to consider taking the long position, although psychologically it is difficult, especially after this type of the performance. But it would be better to get some clarity concerning this engulfing pattern. So those who trade on intraday charts theoretically could consider possible some kind of the ABCD pattern based on this engulfing, which is common target of this pattern. It's usually forming. While the bulls probably should wait for some clarity concerning this pattern. So either market will erase it, in this case bullish context will be reestablished, or just wait when this will be completed and then make the decision on the possible position taking. That was situation on weekend. Currently we've got another very important thing which you do not see on a retail broker chart, but it is visible on the COMEX futures chart. So if you take a look at it, you easily could see that we have the bullish grabber that has been formed recently. What is more interesting that actually this grabber stands in a row with a major context, because despite this drop and significant retracement, you can see that daily trend has not been broken into bearish. So market still holds the bullish context. In pairing of this grabber, it might be a very important thing. Besides, this grabber agrees with the corresponding grabber on 10-year bonds. So you can see here is bearish grabber suggesting further drop in the yields. So what does it mean? It means that those who would like to take the short position, and in general speaking about the engulfing pattern that has been formed, tells us that we should not be too hurry up with this bearish position take, especially when you have the grabber on a background. We will either cancel this scenario depending on the performance, or we definitely should wait for some deeper retracement. Maybe we will get some kind of the ABCD pattern higher. So our task is to consider possible taking with the short position. Is if we in general will decide to do this at all. So if bearish context will not be cancelled, we should try to do this as high as possible to its invalidation point. So currently we could keep an eye on this ABCD performance, because despite that we've got the grabber, overall action here is rather choppy, so it doesn't look like some thrusting action, sharp reversal or something. Currently it still stands gradual. So maybe situation will change on the data release, when we get the personal consumptions, when we will get the gross domestic product revision or something. Situation could change, but for now bearish context, I mean based on the engulfing pattern, still could be formed, and we just need to get the two things. First of all, keep watching for a bit higher retracement, which what will happen around 2340, 2348 area. And second, we should avoid any thrusting action. So if we'll start to see this kind of the acceleration to the upside, obviously we should ignore the bearish scenario, because it has the only context based on pattern itself, because daily trend direction is still bullish. Those who would like to take the bullish position at the early stage and believe with the maybe dollar negative impact of the data that will be released soon, or you just would like to take the position in the early stage of this pattern based on the grabber that we've got on the daily chart, you probably could try to do this right there, just because you will have very tight stop. because later, if still market starts showing some acceleration, it will be not as pleasant as now, because you will have to think about where to hide the stop, and this area will be too far. So if you would like to take the long position, well, maybe it makes sense to consider it right there with the placing stop just below the grabber's lows. This is one of the possible solutions that you could do. On the 4-hour time frame chart, I do not see something really special, so here we have the same downside targets in the case the downward action will start working. Mostly everything remains the same. So that's actually what you need to decide for yourself today. If you would like to go long, maybe it makes sense to do this in an early stage with the placing tight stop, because the pattern actually already stands in place, as you could see here on the gold, sorry, this 10-year bonds on the gold market. Grabber already stands in place. For the bearish position, as I said, I think that we should not hurry up with it and just keep watching and see what will happen, how the situation will develop here, because it's very probable that late in this week bearish context could be cancelled. So that's why we make the decision to wait for high standing levels and check the overall market performance for possible acceleration. If we will get the acceleration, we will not take the short position.